Let's kick off, gentlemen. Welcome to Upside, the news show behind the headlines affecting European venture. The good misters Dan Boya and Lomax Ward are both traveling this week. So today, it is Andrew Scott from 7% Ventures with yours truly moderating. Today, we'll also be joined by a very special guest who I'll introduce in a minute. But first, let's have a look at what's on today's menu. Quantum has been hitting the stock market. We've also seen that Anthropic's new model is Britain's sovereign AI week, which we'll cover. And then we know that Siri has been reborn with a little bit of Google under the hood. Before we do, look forward to what's ahead, plus some deals of the week. Now, first up, let me introduce today's very special guest, because last week, OQC raised Europe's biggest ever private quantum round, and that round was led by Bullhound Capital. And with us today is none other than Callum Stewart, because Callum is the investment principal at Bullhound Capital who led the deal. He's a Cambridge PhD in quantum technology, and he's someone we have referenced on the pod before, because more than a year ago, Callum's good colleague Ben Prade on the show said that he had an exceptional quantum PhD back at Bullhound who fed him all his sound bites. And a year on, the soundbite source is with us here today. So Callum, great to have it with you here, buddy. You've been from Quantum Lab to leading the exceptional round into OQC. Can you give us a quick intro to yourself and maybe tell us the story of the round?
Yeah, of course. And thank you very much for having me on. And yeah, Ben obviously gave very kind words. I think a lot of it was him anyway. We combine on the sources. So yeah, my background, been at Bullhound for the last 5 years. Beforehand, as you said, was doing a PhD at the University of Cambridge. And without realizing it was doing the right PhD, was working in material science, so developing new semiconductors. But for a range of applications, and I focused on quantum applications. So meant that material science is probably the best PhD for going into venture, because you make the materials and then everyone wants to use them. So you get to see every single different technology. So that's allowed at Bullhound for me to lead or help analyze a lot of these technologies that we've been investing in. And we've had a thesis on quantum for a little while, and that's led us to eventually do this OQC deal this week, which we're very proud of and very proud of the team. So happy to talk through the overall thesis, the journey, how we got to OQC, because we've done a number of other quantum deals too. But yeah, that's sort of the background to us and me.
Terrific. Well, let's come back to the deal in a minute. Just a bit of quick news of what's been happening this week, because today is the big day, the day we've been waiting on for so long. Because today is the day SpaceX begins to trade. We're recording on Friday, the 12th of June. SpaceX has already been priced. It's ready for liftoff, $135 a share, $75 billion raised, biggest IPO ever. We all know the background. 3.5 times oversubscribed, more than $250 billion of demand. Now, the question is, was that a good signal or not? Morningstar, they had the fair value at $780 billion. Kramer, on the other hand, he said there's a clear path to $5 trillion. It priced somewhere in the middle at 1.8. We discussed the deal last week, and some people speculated that nothing much would happen until the shares come out of lockup in about a year's time. Now, I think I said last week, I think stuff's going to happen a lot sooner. But Andrew, I mean, I'd love to hear your take. What do you think is, we're just prior to trading beginning here. Is this going to be a pop or a flop or just a nothing burger? What's your read?
It's pretty hard. It's incredibly hard to predict, isn't it? Actually, the interesting thing for me is all this people putting all this money in. The money's got to come from somewhere else, right? So the knock-on effect of other stocks as people liquidate in order to plow into SpaceX. So yeah, I'm excited to see it. I've been reading various pundits' predictions who are far more sophisticated in their analysis of the public markets than I am. I am generally very, very bullish on SpaceX, because when you look at the offerings coming down the pipe, obviously the bulk of their revenue comes from Starlink, only a fraction of the revenue actually comes from space launch, around, I think it was 9 billion. That's not going to increase sort of exponentially over the next few years. But the potential for Starlink is exponential. When you think they're in the low millions of users now, the next version of the satellite will be supporting 5G globally. That's a huge opportunity. I mean, you're talking about, up to a couple of 100 million users that they could cream off from mobile networks, or indeed people who aren't served today with very fast broadband. So the revenue opportunity there is big, but when you're talking about market caps of trillions, even then you've got a very long way to go to close that that PE ratio. So I think when you look at SpaceX as a whole, its ambition, it makes sense. Does that ambition be realized within time frames that make sense for today's valuation? I think that's a bigger question.
Yeah, 100%. I mean, Callum, do you have a house view on SpaceX over at Bullhound?
Well, I think we're overly positive on it. Any significant amount of money going into a company that is pushing the forefront of everything so much is a benefit for our overall industry, right? To push on and have multi-planetary flight, we're going to have to found and mint a lot of new venture companies or venture-backed companies that are developing the new materials or the new compute or the new launchers, etc., etc. I think also you say a lot of money's going into it, but I think for the venture industry, a lot of money's coming out of it, right? A lot of the early employees, engineers, etc., are going to make a significant amount of upside for themselves. And they're people who are risk on, who understand these industries. So it's going to be one of those, which we talk of the PayPal mafia, and this is an extension of the PayPal mafia. The SpaceX mafia is probably going to be even bigger and push forward technology and innovation even further. So I think no matter what you think of the price and the valuation, I think that's left to the public market guys. I think it's just an overall positive thing for the venture industry.
Lots of potential for the industry, for sure. In other IPO news, OpenAI has now filed for their IPO. They filed confidentially earlier this week. They reportedly are targeting a valuation north of $1 trillion. And their words were something along the lines of, we expected this to leak, so we're just going to announce this IPO in any event. And this was just days after Anthropic, they came out with their own announcement. So the whole queue is now public bound. And kind of, between you two, and Callum, I'll start with you. I mean, would you rather own OpenAI at $1 trillion or Anthropic at $965 billion? What's your take?
Well, I think like maybe you are a bit of a Claude lover. So I very much have, my view is I would rather own Anthropic. I think they've hit their niche and found their niche earlier and just compounded on that. Yeah, maybe there's been a little bit of slip-ups where Opus 4.7, 4.8 seem to be a little bit of a downgrade in some regards compared to how astounded we were by 4.6. But I think they've shown that they can always push the bracket forward, and we're almost disappointed because of how good the last steps up were, and we'll get onto it maybe. But Fable feels great. It feels really good to work with, but it's bloody expensive.
The number of users on ChatGPT is still way ahead though, right? Versus Claude, but the rate of deployment of product on Claude, presumably using their own tools. I mean, I think last month, and I think April alone, they released sort of 50 different products. It's insane the amount of product they're pushing out. So that will start to really bear fruit probably for Claude and Anthropic.
Yeah, I mean, you'd certainly hope that Sam Altman has some rabbits up his in his hat, or some aces up his sleeve, because I do think he's got a bit of catching up to do in terms of investor popularity if he's going to beat Anthropic in the IPO game. Now, in other IPO news, Bending Spoons here from our very own continent have been filing for their IPO. It's kind of Milan's app-Berkshire, if you will. It's kind of been buying up businesses, kind of legacy SaaS companies and tech companies. They're targeting a $20 billion valuation with an end June launch. The company is profitable today, unlike SpaceX. Net income slightly smaller, maybe slightly lower aspirations. And it owns some legacy companies like AOL, Vimeo, WeTransfer, Eventbrite, and they say they've identified 1,000 other targets. The valuation they're looking to go out at is already double the October mark. And the question is, Andrew, maybe one for you. Is this a European success story, or is it another verdict on Europe's capital markets that they're looking to go public in the US?
I mean, it's a success story in that they're doing very well, turning, bringing these companies together. What's interesting for me is the sort of the renaissance of kind of the roll-up strategy. It seems to go in cycles that you get these conglomerates are suddenly popular, and then conglomerates aren't popular anymore, and everyone. So I feel like that's almost a cycle that happens. But for sure, the public markets, as we've whinged about many times on this podcast, are weaker and more shallow compared to the US, and that, I think we concluded, was a cultural risk and psychological issue as much as it was anything else. The City of London has a vast amount of cash. It's not lack of cash. It's a matter of where people choose to put that cash, and there is just still this willingness to back the future more strongly in the US than the UK, and we're all trying to make that change. But you just don't see the sort of cult stocks that you do in the US. SpaceX, obviously, we've just talked about being one, and that does have an impact on the ecosystem for precisely the reason Callum said. I mean, just touching on that again for a second, I think it's estimated about 4,000 SpaceX employees will become multimillionaires, and perhaps 400 of them, 10%, will be worth over 100 million. So that's each as a consequence of their shares. So that's a huge impact on the ecosystem for people who are still active. They're not retirement age, they're not exiting their businesses, and going sitting on their yachts. They're very much working, and they're very much excited and very much driven to plow some of that cash back into the ecosystem. And I just hope we can get to that point in the UK and Europe where you're seeing that cycle. But that requires a change in perception on the value of share options by employees who join startups. And I think that only really happens when you get a few of these UK and European successes, and that cash trickles back down, and people see their friends down the pub having become millionaires overnight because 5-10 years ago they started working for some weird startup. So we'll see. I think we're at the beginning of that journey.
Well, one can only hope. I mean, Callum, from your perspective, Bending Spoons, has that been on the bullhound list throughout the years?
Yes, we know the team very well. We've constantly seen how amazingly they execute. And to sort of Andrew's point, this roll-up strategy becomes even more important in the world of AI. You take these businesses that maybe aren't we're overspending a little bit too much on sales and marketing and underspending on actually doing R&D, and you come in and sort of make them shipshape. To your point earlier, it's a European success story. It's buying American companies, AOL, etc., and turning them into sort of a part of a profitable and growing juggernaut. So yes, we can go on and on about listing here or there, but it is a European success story. And to Andrew's point, it feeds through the ecosystem. It shows that exits are possible in Europe. There are strategies that work for that, and that there is sort of a different business model types in tech in Europe that can be successful.
Yeah, and I guess one of the interesting aspects is that it's a European tech story and tech success that's built on the back of gobbling up old school and legacy American tech companies. So there's sort of that interesting twist. Very good. Well, moving on here, just a little bit of economics on the interest rates and Iran. We've had mixed news on the economy this week. On one hand, the ECB yesterday announced a hike of 0.25 percentage points to 2.25. It's the first hike since September 23. And Lagarde, she said she's not pre-committing to a particular rate path. They're taking it meeting by meeting, which is not necessarily good news. The new projection is that 2026 inflation will be 3%, up from 2.6, and peak at 3.4 late 26. So actually not very good for the overall economy. On the other hand, Trump has also promised us that this time, really, for sure, a deal is nearly done. So which way will it spin? Who knows? We don't for sure. So we just focus on building good companies, and hopefully good things will come of that. Now, with that flash news round, let's move on to the good stuff. Investing and building in the tech that can move the needle and make the world better. And what could be bigger and better than quantum computing? This week was a proper Quantum Week. We had lots of European quantum action. We had the Quably 150 million euro round. We had IQM SPAC. We also had the Quantinuum that IPO'd last week, earlier this month, at a nearly 16 billion dollar valuation. I'm getting a little ahead of myself here with so many trillions being thrown around. And then, of course, we had the OQC raised at 260 million, which Callum led. Now, the real story is not just European IPOs and European quantum rounds, but really that quantum went to the capital markets in a big way. And things, they normally go public when they start to get some economic substance. And it seems like the sector has gone from always being 10 years away to actually being ticker symbols. Now, from what I know, OQC haven't shared too much about their revenue numbers yet. Callum, I mean, do you want to talk maybe a bit more about the deal, how you got to underwriting it, and what made the size of the round comfortable for you?
Yeah, and I think to your point, the private markets are slightly different to the public markets in quantum, it seems, and there seems to be a lot more capital that's willing to go into it at the moment. And you mentioned with sort of Quantinuum and others, but with OQC, what we're seeing in quantum is we're now sort of past the first inflection point of the tech actually proving that it can be useful and work, and now we're moving into the commercial realm. So the sort of the thesis around OQC is that they're the first company that are really thinking about bringing quantum computers into co-located ring-fenced data centers where enterprise users can actually start working with them. The superconducting architecture that they're built on is sort of solves some of the issues that it has for scaling, but I see that more as a wedge of getting into the places where these end users, be it governments, be it banks, want to start working with quantum computers and can work with it seamlessly, abstracting away the fact that you're working on quantum so that it sort of feels like just any other accelerator that you may be working on. So to the point about commercial revenues, yes, all of quantum is at the start of that, but it's very much coming in the next year, 2 years, as these systems get to a point where you can start to do useful calculations on them. So I think as part of that round, you saw the day or so after JP Morgan and AMD looking to build the first sort of financially focused AI quantum data center in London. And that just shows sort of the focus that OQC has on, they're thinking about cost per floor tile. They're thinking about how do we integrate it most effectively, most efficiently, in the quickest way so that you can keep the clock speeds with the GPUs. So that's almost what excites me most about them, is that they're thinking about how do we actually service end customers that aren't necessarily just quantum PhDs.
So Colin, what is going to be the first real application here? Why is OQC uniquely positioned to be the ones delivering that? And, how do you see the timeline? How far are we really away from something that can be used in production?
Yeah, so I think the quantum is going through sort of, I wouldn't say classic, but we're starting to see the early stages of an exponential function in development forming. You've had 3 papers come out this year, one from Q-Control, another one of our portfolio companies, one from Google and one from Iceberg Quantum, that have reduced the number of, and then the Gidney paper last year, they've reduced the number of qubits required to crack RSA encryption by orders of magnitude. So not only are you seeing massive improvements in the hardware that's going on, you're also seeing massive improvements in the algorithms or software at the top. That means that they're going to meet at some point in timeline, say 2028, 29, push it out a little bit because everyone's over optimistic, 2031. That's still within sort of the not too distant future. What gets me excited is that RSA is kind of the only thing that the whole industry is focused on. We haven't yet had JP Morgan or Citibank or others fully focus on, okay, what can we build? How can we make a lot of these algorithms more efficient within the domains that they're interested in? So finance, so sort of pharmaceuticals for other groups. So I think you'll then start to see better algorithms and protocols come out in those industries as well as this hardware gets to the point it's going to be in sort of end of 27, early 28.
Okay, so you're sort of talking 18 months away. Is that?
I think you may see Quantinuum gets people so excited, and Andrew, I'm sure you can sort of mention about Universal Quantum and others in this group that are working on the ion trap side. They may show some more useful things earlier because they have some quirks about their qubits that make them a little bit more stable than others. We have actually, and sorry to big up my portfolio company the second time, Q Control just released a...
That's your job. It's your job, Callum. Don't be shy.
Yeah, on quantum advantage. So they did quantum advantage in sensing last year. So that's being able to outperform a strategic inertial grade navigation system. So replacement to GPS. So that's something else from quantum. Sensing is a lot closer opportunity. But this year they had quantum advantage in actual computing. Now, whether that holds for more than 6 months that Google's initial quantum advantage held for will be wait to be seen. But so far it looks good. So we're at quantum advantage potentially this year or next year. So that is quantum computers solving problems that classical computers can't in faster times and with lower overhead. How long that takes to convert to commercial use cases, yeah, probably sort of 18 months, 2 years is what I would be optimistic on.
And when you think about underwriting that case, when you think about the amount of capital that's going in and the valuations, would you say, are they priced to perfection, or is it really sort of, yeah, we're all quite comfortable that the 18 months will work out, and if it ends up taking another 18 months after that, what does that do to the whole investment case?
Let's not conflate private with public market. I wouldn't say you're necessarily getting public market valuations in the private markets, because there is a lot more critique on what that revenue looks like, what the commercial trajectory looks like. So I think the valuation that we got in with OQC is a very sort of fair reflection of how advanced it is, but without sort of looking at those what are quite astounding public market valuations. So for us, I think we're underwriting that the real sort of value drivers for quantum, and this is why we could do these sort of investments early in the fund life cycle, are in the 2030s. The early 2030s is when sort of we can be sort of conservatively saying things will slip. So if you can raise a lot of capital now, then that can get you to the 2030s.
So it sounds like the quotient has really been reduced from 10 years to 5 years, but it's not tomorrow.
It's not yet. It's not tomorrow. But then I would say some of the technologies that quantum is pushing forward is tomorrow. So quantum sensing, so using effectively quantum systems to be able to detect the Earth's local magnetic field or gravitational field that you can then navigate by, that's now. That is, people are rolling out and testing it. So it's not like it's a singular block. Computing obviously gets a lot of the headlines because it has sort of crossover to AI, and everyone can sort of see how amazing NVIDIA's done, and they want to back the NVIDIA of quantum. But sensing is what's happening now, and it's a massive market that the world's geopolitics are making even more important. And that's before we then get into the exciting use cases that it has in brain imaging and other things.
So just double click on the quantum sensing there for a minute, Callum. I mean, just for the audience, can you help maybe unpack what problem that solves that you can't solve with today's GPS technology?
Yeah, so, well, you can solve it with GPS. The problem is that GPS is being blocked or denied across various regions in the Earth. So if you're flying from the UK or Europe out to Southeast Asia, out to Australia, to the Middle East, you're probably flying for an hour or so at least without GPS because it's being blocked over various parts of the Middle East, the Strait of Hormuz. So every hour that you fly without it, the pilots are relying on an accelerometer or things to sort of work out where you were. and kind of where you've moved to and how much amount of time to where you are now. But the error on that grows significantly every sort of minute you don't have GPS. So quantum sensing, there are maps of the Earth's magnetic field fluctuations. So sort of on how a sort of mountain range changes the magnetic field, or how it changes the gravity. So you can use those maps with these quantum sensors that map those changes to almost do orienteering based on the Earth's local magnetic field or gravitational field. So then you can basically, and Q Control, our company, showed us last year, you have the same level of accuracy of GPS in your navigation,
but without relying on those sort of legacy technologies. Terrific. I mean, Andrew, you've also been very active in the quantum field, and I think Universal Quantum is one of yours. What's your read on a week like this? Is this sort of quantum's big coming out, and now it's all going to happen, or are you also sort of thinking, look, we might still be 5+ years away?
I think it depends what you're saying 5+ years away from. Yeah, I mean, we were first taken into Universal Quantum, which is an ion-trap company, so different technology. Callum's right that you're starting to be able to do some things that are interesting. I wouldn't say useful, and I think and I think for quantum computing to realize its potential, we need that quantum utility, which really just describes a machine which has enough power, enough qubits that you can really do some of the run some of the algorithms and produce some of the outcomes that companies and governments will want, which you can't do today on classical computing, and that probably is going to require 1 million qubits or indeed more. Now, I mean, Callum's right. Obviously, the efficiencies coming down, but I think largely for architectures with sort of high qubit connectivity, like you find actually in Universal Quantum or neutral atom systems. And my understanding is that they don't have quite that same level of connectivity yet in superconducting qubit machines. So it's harder to run some of the efficient QLDPC codes that most of the reduced overheads come from. But it's also important to keep in mind that these numbers are sort of the minimum to start unlocking an application. And once that's done, people will want more faster and higher quality solutions. And for that, you'll need more qubits. So it's a bit like classical computing. It's not like everyone, the first IBM XT 4.77 megahertz came out, which I almost remember because my dad had one. And they just stopped making better computers once you got, once an application was, WordStar was working on it. So it's a strange mindset to be in because you're always going to want more. And I think, people who are sort of very, very focused on this area, like DARPA and others, are saying, we now need to look at, tens of millions of qubits. And so I think the companies that will win are the companies that are going to crack solutions to that, which are either sort of modular solutions or something else. And for some of the technologies that require much lower temperatures at the moment, I don't know how you get 1 million qubits into a single dilution fridge. And so also it's worth pointing out that some of the technologies...
I guess that's part of our investment in OQC is the scaling that you can do with different architectures. So we're now seeing the second wave coming out in a lot of different things. So Universal Quantum, obviously, sort of they solve some of the scaling issues in ion traps, and OQC do the same things in superconducting. So I think, to your point, Andrew, we're going to see as a lot of these come online, the commercial side ramps so a lot quicker. And what you're actually seeing that's quite interesting is a heterogeneous architecture is accelerating things even further. So you have two different modalities work together in the same system. So that's why I think working in as a platform, bringing it all into one, you're going to see I can see quantum having a ChatGPT moment in sort of the 28 time window, maybe 29, that then accelerates everything even more than what we thought beforehand.
A whole new computing paradigm right around the corner. How exciting. Andrew, did you have one final comment on this one?
Yeah, I was just going to say the other thing is going to be the cost. All these technologies have a different cost base. Ultimately, once there is more than one person able to produce one company able to produce a quantum machine that's useful, then the cost base, actually what it costs to build these things and then sell them is going to come into play. And the different technologies, be it supercomputing, ion trap, have a markedly different cost base. And so we're not at that stage yet because right now it's just like, well, whatever it costs, we just want something that's useful. But it's going to be interesting to see at what point that competitive edge plays out over the next few years.
Absolutely. First, make it work, and then make it better and cheaper. Talking about better, maybe not so much cheaper, is the big news we've had coming out from Anthropic this week, because they have a new model on the blocks. This week, they shipped Fable, and it's a guard-railed version of their flagship Mythos model that was released earlier this year. Now, to figure out how Fable and Mythos are connected and related, we can go a little bit into the roots of the words, because they are closely connected in the sense that fable is from Latin, fabula, a telling, a story, a tale, from fari, which means to speak, whereas mythos is a Greek word that also means word of speech or utterance. And again, it says something about something. Words very LLM-centric. Now, in Greek, mythos would often be a sacred story, and over time, myth has sort of become the untamed or raw story, the one for the priesthood, the one that may not be available to the masses, whereas the fable is the children's version, more tamed with a bit of a moral attached, so all us little people can tolerate and understand it. And that is exactly the approach Anthropic has taken here, because they've shipped Mythos to the grown-ups, and then they've shipped Fable to the rest of us. And now we have Fable this week. And what is Fable? Under the hood, it is essentially the same model as Mythos, but from everything we can see, it is the most powerful model you can buy. On SWE-bench, which is a software engineering benchmark that's very popularly used to measure these models, it scores an 80% versus GPT 5.5's 59, but it is heavily guardrailed. And what does that mean? Well, it means that the model has guardrails so that you can't use it for nefarious stuff. It does bring some side effects. I had a tester to just do some simple queries about my own health, and I got a biological research warning. Make of that what you want. And when you do that, the model just shuts down and replaces itself with Opus 4.8, which is also a powerful but much less powerful model. And to some extent, you can ask, why is that important and what does it mean? You could argue that it means we've hit an AI glass ceiling, where the models are now so powerful that we handicap them before we can let them into the wild. Well, but just to keep myself honest here, Anthropic, they're saying that 95% of the sessions they run, they never hit a gate, and that the ceiling only binds at the edges. And 95% sounds like a lot, but it also means that 5% of all sessions are hitting guardrails. And if you think about how many sessions take place on these models every day, you can see it is a high number. So it'll be interesting to see how this develops. We'll talk about Fable and Mythos and Europe in context. But before we do that, I'd love to get some reactions for you and from you guys. And Andrew, you've said that the models are still just not reliable. Now, we've seen the strongest model ever here to be shipped is shipping in a handicapped version. What's your take on that?
Well, it's interesting that Anthropic built a more powerful model, but they built one they don't fully trust. I'm not sure where the line lies between trusting the model and trusting the user, and just trusting their legal department not to get them in trouble. But yeah, we're running into governance limits, not just technical limits, and the bottleneck may no longer be intelligence, although you've pointed out I don't like that word used for the transform by LLM models, but confidence in releasing it. So, sometimes now sort of every AI launch sounds less like a product announcement, more like a controlled release. So yeah, I'm not sure if AI is getting so much step change smarter now, but it's trying to close the gap between what companies have built and what they're willing to let the public use, and that appears to be widening.
It is an interesting glass ceiling, isn't it? Callum, I know that one thing is developing the model, something else is running them, all the inference, all the running cost, and inference is really where the cost lives at scale. I think you're in D-Matrix, which is a company that invests in chips for inference. Do you want to talk about what you think this means from the inference perspective and maybe the industry at large?
Yeah, and maybe I would just add one thing. Fable got jailbroken, 24 hours after launch? So human creativity and ingenuity seems to still be able to outsmart, well, at least the coders who try to put guardrails on the model. So can you really contain it? And why is everyone not having access to it anyway if if it can be done that quickly. But yeah, the cost is quite phenomenal, and this is maybe only the early price to get us hooked, and isn't the real street price that we'll see as the API or it goes to sort of only usage based. I think what we're seeing with a lot of these models is that they're still being deployed on the old architecture. Yes, it's the most sort of the forefront GPU models from NVIDIA, but it's not these new, should we say, IPUs, inference-focused processors that are very much tailored to try and run these transformer-based models on. So I think we are at the start of that, and a lot of the cost comes down to, well, we can only run the massive, right? You're only starting to see as these new processors like dMatrix. So dMatrix simply, they move the compute into the memory. So you don't have the memory wall that involves sort of shuttling the model parameters backwards and forwards. So they claim, and this week actually they did a big announcement that they're now in full production for their new Corsair chip. So effectively what it does is that you can make the running of it far more efficient. You can sort of either improve the latency or improve the throughput, and you can do it at far lower energy levels. So what we're seeing as these new chips move into production is other groups, so like Gimlet Labs, who are running a lot of they're trying to orchestrate a lot of these different chips, being able to package up different parts of the model processing onto the relevant chip that's required. So the dMatrix chips would do the decoding phase of the inference side, and the GPUs would do the initial part. So that's sort of where we're going to move to, but we still have to, rolling out chips is a long business. Even getting them into tape out, even post tape out. So once you've put your first chip into silicon, and if that all goes well, you have to find a random leakage current. You have to wonder why a thermal hotspot is happening in a certain area. So it just takes time to get these next generation, or I wouldn't say next generation, these new paradigms of chips out and useful. And that's maybe when we'll start to see the cost come down, but maybe we won't, because they'll allow us to be able to push the frontier of intelligence even further. You're seeing the Oriole networks, they're looking at distributing different, so a UK-based company looking to distribute different parts of the experts in model of experts across different chips. And because they have an optical interconnect, you can sort of bring that together more seamlessly. So I think we're going to start to see innovations in the data center build out that will lead these models to being a lot more performant, but whether that lowers costs or improves intelligence, I'm not sure.
I think a lot of the safety discussions sort of assumes these systems are becoming more agentic or like self-directed, but the deeper issue may be that we're still fundamentally they're next word prediction machines, and they can maintain context within a conversation window, but they don't possess the context like in the human sense, the persistent model of the world, like causality, intent, truth. And like every model seems to raise the question, are we seeing genuine reasoning, or is it just increasingly sophisticated pattern matching? And I think the industry often talks as if this sort of intelligence is slowly emerging, but actually many of the failures still look exactly like what you'd expect from a system that doesn't actually understand what it's saying. The counterpoint, I guess, from the Anthropics and the OpenAIs would be that understanding is a sort of philosophical distinction. And if a model can build increasingly accurate, depiction or understanding of the world internally and like reason across them, then perhaps understanding sort of emerges miraculously, at scale. But I think that, hallucinations and that sort of brittleness, I guess, and poor translation to genuinely novel situations suggests that, as my view is that the architecture itself may have limits. So, every new safety layer may be compensating for the same underlying problem, that these systems are extraordinarily good, generating very plausible language that sounds intelligent, but I think we're still debating whether, they actually know what they're talking about. A bit like us on this podcast, really.
Really good question on both. Certainly on the first one. The second one is absolutely well established.
Well,
Of
it's very
course
clear we don't know what we're talking
do.
about on the podcast, so that's done. That's not a question to be answered.
One of the things you raised, Andrew, was around safety and AI safety. And let's talk about what that means in the context of Europe. In the UK, we have the AI Safety Institute. They've been working with Mythos for a while. The European Union, they have ENISA, which is the EU agency for cybersecurity. And they were granted access to Mythos only on the 2nd of June. And it was Anthropic that sort of said, listen, you can have it too to play with. Now, the twist here is that last week we talked about CADA. CADA is this proposed new European set of rules that says that European government institutions and agencies shouldn't rely on digital platforms that are not sovereign for important work. And arguably, cybersecurity is important. In fact, by CADA's own definition, it sort of falls into at least level 3, if not level 3 plus. Now, CADA would basically make the use of Mythos non-compliant because it's a US-owned, US-run model, and there's no security agency carve-out in the draft. New rules are not in place yet. They're not going to bind until 28, 29 at the earliest, so there's some time to fix the own goal. But this seems exactly like the type of issue that can be created by aggressive regulation. Now, Callum, what are your thoughts on how Europe can best strike the balance between sovereignty on one hand and access to the best tech where we need it on the other?
Well, I think in this case, actually, just to your point, that the slowness of the bureaucratic engine and it not being implemented until 28, 29 means we'll probably have open source models of the same sort of caliber as Mythos and the same model size that can maybe be repurposed for European only. I think it's a common theme that seems to be the view is that it's hamstringing Europe. But I guess maybe on the positive side, or the way you could think about it, you are seeing a lot of AI backlash in the US that isn't necessarily being as reflected here, and maybe that's because the Europeans don't necessarily buy into it as much, or it's not sort of as shoved down their throats. But some form of showing that there is some control or some sort of people thinking about what could go wrong, maybe in the longer term allows the proliferation of that technology a little bit better.
So you think sort of an important part of managing the public perception and helping to drive it in a positive direction. Andrew, what are your thoughts on this? I mean, is it regulatory overreach, or is it calibrated the right way?
I think it's great that there's an institution looking at it, but you can't win the race if you've got the brakes on. And it's as simple as that. And this idea that somehow we can impose these constraints, especially some of the European recommendations, and not have an impact on GDP or our defense capabilities is a bit naive. And unfortunately, the only way you get to dictate the rules is by being a leader and keeping up with the Joneses. And certainly at the edge, when you're talking about autonomous military systems, you really don't want to be left behind because you're hamstringing yourself. So I'm very, very cautious around some of the safety legislation. I think things are moving so quickly that it's great that we're looking at it. I think the legal frameworks will struggle to keep up. They already are. And most of all, it will be very, very concerning if we impose legislation which constrains businesses on using the best models, or even worse, preventing us develop the models we need to not be left behind in 20 years.
Yeah, I would say I also completely agree. But yeah, it's almost, you wouldn't be getting this model on the 2nd of June if it had been developed here. And the only way it could be developed here is if you were able to sort of go full speed and not be encumbered at every point. So I was kind of saying, my point of view wasn't backing the need for safety regulation. I'm just thinking what could be the positive of it. And the fact that it's not coming into 28, 29 means it's probably going to be redundant by the time it comes in.
A silver lining indeed. We're so slow, even at regulating, that it's harmless. Okay, Callum, very good. I like the optimism. Now let's talk about some other homegrown things. Let's talk more about European tech sovereignty, because we have more news about sovereign AI models. We've been talking about a UK sovereign model for a while. And this week, Cosine, a London-based coding agent lab, they announced Lumen Sovereign, and they made a play to release Britain's first sovereign frontier model. Now, that might seem counterintuitive because to date, before the announcement, they had raised just $8 million, which doesn't sound a lot in comparison with the US Frontier Labs or even with Mistral. And it does look on closer inspection like what's being built isn't a model from scratch, but rather an open-weighted model that is upcycled on UK soil with more post-training. Now, there's a partnership with the UK government. They're going to get 500,000 GPU hours from Isambard AI, and they're going to be spending a good chunk of that on AI coding and another good chunk on things like cyber and KYC and AML, plus some clinical trial stuff. The whole idea here is to develop a model that UK corporates and governments can use in air gap situations on their own premises, inside their own walls, cheaper than the American models, and sort of customized to local needs. They've got some MOUs out with BT, with BAE Systems, with NatWest, Lloyds, and HSBC. Now, our understanding is that as of yet, it's not actual contracts, it's sort of design inputs. So nobody's really bought anything yet. But the idea here is, look, we're going to try and build something here that can be used locally, that has been developed locally, and that isn't solely dependent on the US. Now, do we think there is a need for this kind of sovereign AI model? Andrew, you've had views about that in the past. I mean, is this announcement here, is that important and newsworthy, or is it even the right approach?
Yeah, 100% that we need sovereign models. You know, I've said here and described the situation of AI as being, you know, on the journey towards nuclear weapons. And I think if you want to retain yourself as a first class world power, then it's a choice as to whether to have that nuclear capability or not. And you need to start today. So it's a step in the right direction. My biggest concern is whether this sort of consortium approach will work. I don't know the complete ins and outs, I'll be honest, but from what I've read, you know, it remains to be seen whether consortiums structures are consistently good at producing frontier innovation. You know, you think about all the biggest innovations, you know, Google Search, ChatGPT, GPT, you know, AWS, none of those were built by a consortium. You know, frontier innovation tends to come from a small group with very aligned incentives, a huge risk appetite, and then, you know, once they get going, the capital to back it up. So I'm sort of cautiously optimistic. I might have liked to see a slightly different, bolder approach, which is sort of to offer large tenders to, you know, 2 or 3 companies who were trying to replicate the more traditional, fully integrated vertical company in the UK, like an OpenAI or an Anthropic, because that is a structure we know works. You know, it's incredibly hard as it is without sort of reinventing the structure in which that world-class innovation can happen. That doesn't mean it won't work. And it's great news overall because it's bringing to the forefront the importance of having something you control. And I've been the biggest sort of proponent of that happening because we don't want to be sending all our wisdom across the ocean to the US and having wisdom come back, which may or may not be biased, which we don't control and, you know, isn't nation state.
Certainly a sovereignty angle there. I mean, Callum, what's your view? Have you already made bets in the frontier lab space, and do you see a need for a UK sovereign model?
Well, I think you're seeing the need for, I wouldn't say necessarily a UK sovereign model, but a bargaining chip on the global stage. So obviously America has all the cards, Europe has ASML, which is a pretty powerful bargaining chip. I would say the move to fund quantum, the Procure program, is trying to do the government trying to do a venture-like bet on an industry to become a bargaining chip within the global sort of the new geopolitical environment that we're in. Do we need a sovereign model? I think we just need models built here or sort of specific companies built here 11 labs, could that be considered a sovereign model for a very specific application? It is a sort of UK champion in AI. DeepMind could have been a UK sovereign champion. We see others coming out of it, Ineffable Labs. I think the UK has enough AI talent. If you're trying to replicate a Mistral in the UK, maybe this program to build a sovereign model is almost like a guaranteed procurement contract. Look, we will help this startup develop something that we need to help seed a wider ecosystem. I can see that being the play. To your point, we backed multiverse computing in Spain, that the Spanish government, it's not a frontier model creator, it does model compression and gives those models sort of frontier-like capability at lower power. So they're trying to build a champion that's a bargaining chip that no one else can replicate. So I would say, let's find out what the UK can do really well and double down on that so that we become part of this global ecosystem instead of necessarily replicating it. Aleph Alpha tried to do that in Germany and got bought by Cohere because it wasn't necessarily, they didn't need another sovereign capability there.
Yeah, I mean, like, sort of counterpoint to that, I worry a little bit. Isn't it giving up a little bit? Like, isn't it sort of just kind of accepting that we've lost the race, and we should kind of, well, we'll do something so that we're sort of a thorn in the side enough that maybe we get some leverage, but it doesn't really solve the fundamental problem, which is AI is our future, and if you don't start now, it'll get to the point where actually catching up becomes essentially practically impossible. I mean, the reason why I think the nuclear analogy is so interesting is because it's pretty easy, in quotes, to sort of build some sort of nuclear device, but the infrastructure around that for it to be useful, actually particularly to deliver it reliably at distance whenever you want at the push of a button, is extremely complex, extremely expensive, and requires, infinite amounts of vertical integration and delivery systems and nuclear submarines, et cetera, et cetera, et cetera. And I think that's analogous to AI, that as the technology continues to evolve, transformer models aren't probably going away, but they will be supplemented, or new technology will come along. And I think unless you set your sights on keeping up and being autonomous and having sovereign capability, inevitably you just slip automatically to being a begging bowl and accepting whatever you can get with or without that bargaining chip from the US or whoever. And I think for me, when you look at where this technology is going, that's a big worry.
Be ambitious, go bold, be the master of your own destiny. Andrew, we can always count on you for some solid views there. Now, we've had some news on quantum and on AI models. We've also had news on AI hardware. This week was London's Tech Week. We've seen all sorts of announcements come out there. We've seen a government package. We've seen some companies timing their announcements to this. And specifically, the UK government has announced a 1.1 billion pound hardware plan. By 1.1, maybe I think when you squint and round it, it rounds up to $1.5 billion. I don't know whether that was the intent. Let's unpack the plan a little bit. There is a push to build a big national supercomputer in Edinburgh. 750 million pounds set aside for that. Should land in 2030. That's around the same time as Callum's new quantum computer. We'll see if it'll still be relevant by then. Inside the package, there's 400 million pounds for chips, and 150 of that will buy British inference chips this summer. So one of the things we've been talking about here in the program is that the government should, rather than just handing out grants, should be a customer and actually buy stuff. Exciting to see that it's the intent here now for the government to buy chips now from British suppliers. Now, the government, as part of the package, also announced that in partnership with the British Business Bank, it will make the largest fund investment it's ever made to Playground Global. Playground Global is not a typical British venture capital fund. In fact, it's not really a British venture capital fund at all, because it's a fund from Silicon Valley. Now, Callum, I'd be interested in your thoughts on this, because you're building and have been building a great investment firm here with Bullhound Capital. What are your thoughts on the British government effectively partnering with Silicon Valley investor, should we call it talent, to get them in? Is it a helpful addition to the industry where we are short of growth capital, or do you feel it's displacing your activities? Give us your view.
I would say that if the BBB were to pick one fund to do this, Playground Global would be one of the sort of the best ones that I could have picked. They're earlier investors in D-Matrix. Their venture partner, Sasha, is ex sort of VP of software at NVIDIA, and he was instrumental with D-Matrix in getting their software to the level that it's needed to actually be rolled out onto sort of into full production. So the one thing that I always hear from a lot of US companies or companies redomiciling to the US is they can get 2 times the engineer in the UK for half the price. So the talent here is amazing, but there is not the quality of engineering leadership that there necessarily is in Silicon Valley. So I can see that this Playground Global sort of fully focusing on the UK, the expertise that they can bring will be instrumental for the sort of companies that the BBB wants to back and is becoming a lot more, should we say, sort of commercially focused on and going after. So I can really see this as being complementary to the overall UK ecosystem. If we think about this is probably one of the best moves for the UK founders. They get access to this very experienced group that has the ability for the Olixes, for the Fractals to be able to go through their whole sort of tape out and actually building the software stack on top. So I see this as a very positive move for sort of enticing the Americans to really care about the UK industry, especially with such a strong group as Playground.
So it sounds like it's sort of a relatively positive endorsement and a view that it's a strong partner to bring in. Andrew, what are your thoughts on this? I mean, you've sort of said we should go bold, we should build bigger. Is getting and importing some American, swashbuckling talent, is that going to be a driver here?
I mean, first of all, I think the BBB have been instrumental in accelerating the VC sector in the UK, and it's great that they've been given more money and they need to continue doing what they're doing. Playground Global, completely agree with Callum. Fantastic fund. They're actually investors in Universal Quantum. We've got some co-investments with them. But I'm immensely frustrated, I'm not going to lie, that this money's gone to a non-UK fund. There are a whole bunch of extremely smart fund managers in the UK who could have run this as a UK fund and who do have the ambition. And I just think that it was unnecessary to ship in mummy and daddy from the US as if we don't have people who know what they're doing on our little island already. So yeah, I'm a bit frustrated by it, I'm not going to lie. And it's similar to what happened with Aria and 50 Years, which is also an American fund that they partnered. Again, they do a fantastic job. 50 Years, incredibly smart, successful fund. It's nothing about them that they are not great fund managers and not great people and incredibly smart. It's more about there are also smart people and we need to back ourselves and back our own funds and back our own VC ecosystem, because that money will be invested into UK companies. The pull will be even greater to flip US if it isn't already, just because of need, because of capital and because of market. But the carry and the profits will go back into the US ecosystem or be taxed by the IRS and not in the UK. So short answer, I would have liked that to go to a UK fund manager.
It's a £150 million commitment. I'd be interested in your thoughts on this, because the Reeves and the government, they get a lot of sort of complaints for not being enough, sufficiently business focused. They did make a big additional capital injection into the BBB, I think in the order of several £billion. And if you think about it, if this is 150 million out of, let's say, an additional pool of 5 billion, and the remainder, let's say 4.5, 6, 7, all go to homegrown managers, is it sensible to get a bit of US talent into the mix, or would you simply be completely, no, it all has to be UK and UK only?
I think the talent comes across anyway, right? And it's not an altruistic sort of choice by a US VC to invest in a UK company. It's a purely commercial one. And Playground Global, as I said, invested very early into Universal Quantum. So when there are great companies, they will invest. And I don't think it needs, essentially the UK Sovereign Wealth Fund equivalent to be backing those managers. That said, I don't know whether the fund is domiciled in the UK and will pay UK tax, and the UK tax on the carry. Maybe it is. That's great if it is. So look, I'm not saying this is a negative for the ecosystem. It's probably a net positive, but it just, when I see, I run Dragon Chasers, as you know, which is nearly 200 GPs and LPs representing about 50 billion under management. It's primarily not for profit, and there are a whole bunch of GPs in that organization who would do an amazing job of deploying that capital, in the UK. So I just think we need to be careful about the signaling. And the UK, and indeed Europe's biggest problem that we talk about on this podcast a lot, is often our self-confidence. It's about backing ourselves, and it's about backing our own homegrown stuff and people and companies. And I think that is what we should be doing. And we'll make a few mistakes along the way, but we have a long heritage of inventing the world, and we've got plenty of incredibly smart people like Callum and others who could easily deploy that 150 million.
I think that's all fair. I mean, I would say it seems to me that we're almost suggesting that we're not backing ourselves. But if I've got a pool of capital and I'm putting 95% of it into UK funds and 5% to a US manager, we say that that's not backing ourselves. It seems to me that it still is. But it seems you're sort of saying, no, it should be 100% all the way.
I was going to say, I kind of agree with you, Mads, in the sense that we can't necessarily make it a judgment on its own. It's sort of look at 2 years' time, what has been backed. The BBB's mandate is to support the venture ecosystem and the companies. And I think bringing in talent like this to be very focused on the UK is a net benefit. But I appreciate Andrew's point that we need to build the sort of confidence locally, but maybe let's just see how the rest of the year or the deployment plays out to how that confidence is built in the UK.
I don't doubt they'll do a good job, and I'm sure it'll be a great investment for the BBB. But I think there are other managers I know would very much like that money.
Good. Well, lots of different views on that. I'm just happy to see more money going into the ecosystem because we need it, and even more preferably, hopefully we can find ways to unlock the pension capital. I think that would be good for both pension savers and also for the economy at large. Now, let's move on because we've had a big Apple week. We're not necessarily going to spend a lot of time on it, but Dan is away this week, and this is his big moment, the moment he's been waiting for, which is that Siri has finally been announced, the new Siri with AI, or at least released-ish. It was shown at the Apple Worldwide Developer Conference earlier this week, and it is a ground-up rebuild custom Gemini that sits in the back end. So, more than 1 trillion parameters in the most powerful instance. It looks like Apple got a pretty good deal. They're going to pay Google about $1 billion a year, which was much less than what was quoted from some of the competitors. But it's not just a plain vanilla Gemini. It's a model that will run inside a private Apple cloud. Google will not see the data, and everything is being customized and integrated into the Apple ecosystem. So hopefully something to look forward to there for Dan and every other Apple aficionado over the year. Now, we are getting up towards the end of the program here. Just a couple of deals of the week to mention. Andrew, do you want to talk about ICEYE? It looked like that was something in your wheelhouse.
Yeah, I mean, fantastic valuation, Series F at 10 billion plus valuation, General Atlantic lead, so world largest commercial SAR satellite operator, highly profitable. Well, in terms of at least a $250 million in revenue, 100 million EBITDA, very, very long contract backlog, I think of over $1 billion. And rapidly scaling satellites, 50 to 100 satellites a year by 2028. So another example of how Europe is really punching its weight, I think. If not in space launch, which is a big bugbear of mine, access to space, but certainly in satellite build and capabilities, we're starting to catch up, and I think it's all good.
It's good to see for sure. Another deal of the week: Neura Robotics out of Germany, 1.4 billion raised at a 7 billion valuation, closed on Wednesday with investors like Tether, Qualcomm, Amazon, Nvidia, Bosch, Schaeffler, and the European Investment Bank in the mix. This is really a humanoid robotics play. They're talking about 6,000 units this year already, with an order book above 1 billion. They've developed a sophisticated approach to training the models and doing skills transfer to get the robots quickly to a place where they can be useful in production. And David Reger, who is the CEO, he said he really sees this as the last chance for Europe to actually ever produce anything meaningful again, which is a big word to come from a German, somebody in the European industrial heartland. Now, Callum, I don't know if we've already had your deal of the week or whether you have another one in the wings.
I don't necessarily have a deal of the week beyond what's happening today. I think it's the week of the IPOs, right? We've had a quantum one, we'll have a space one today. The only one we're missing is a fusion one to almost have the trifecta of future technologies that are coming to the public market. So I just would say that this is the week that it seems a lot of things are changing.
Yeah, that was very exciting.
The future's coming home. And I would just add on the Neura Robotics, and people almost overlook that Europe is the home of robotic deployment. So I can see that being a very overlooked area that Europe could be quite significant at. Everyone deploys ABB, Bosch around the world for precision manufacturing. So people make a lot of noise about China building these cool robots and America pushing the forefront of intelligence, but Europe is pretty good at deploying these things.
No, 100%. I mean, sadly, you could say we've sold KUKA Robotics, and ABB Robotics was sold to SoftBank. So we've been selling some of the crown jewels, but hopefully there are new, kind of the next generation of European robotics pioneers can come through. And yeah, it's good to see. In terms of what's up in the week ahead, so next week, SpaceX will start trading. It's not going to be in any indices yet. The S&P blocked it. They're saying it's going to take longer before they'll let SpaceX on board. Nasdaq 100, SpaceX should enter in July. So next week will be active money only. It'll be interesting to see how it does. Monday, we've got Bending Spoons. They're going to open their book for the listing. Tuesday, Strasbourg is going to rubber stamp the AI Act loosening. We spoke about it a couple of episodes ago, and at the time, we said a deal would likely come in May. It did about 6 days after our episode was taped. Now it's finally getting rubber stamped. Now, at the episode 89, we said that the Parliament would initially block the loosening of the AI Act. The whole idea here is to try and water down some of the provisions to not hamstring European enterprise too much in the adoption of AI. It wasn't Parliament that blocked it. It was actually the Council, so the group of sort of governments. So mea culpa, we got that one wrong. But it was blocked at the time. It has now been unblocked. It was Merz from Germany who unblocked it, so good on him. And what actually changes is that a lot of the rules that were initially part of the AI Act are going to be pushed back. Some of the high-risk compliance has been pushed from this August to December 27, embedded AI all the way back to 28, and machines have been excluded completely. The only thing that is still in is medtech. Medtech was left behind, which I do think is a bit of an issue for the European economy, but let's see how that plays out. Now, in terms of the scope, initially, it's just the AI Act. The GDPR and the cookie omnibus is still stuck in committee. Hopefully, they can get that sorted as well. So that's going to be middle of next week. Thursday, we're going to see Accenture earnings, which is going to be the cleanest read on enterprise AI service demand. Always a good bellwether to watch. That is it for the week ahead. Callum, Andrew, it's been a pleasure and a gift having you here on the program today. I hope you've enjoyed this as much as I have. To the listeners, thank you very much for tuning in, and see you on the next one.
Thanks, Matt.
Thanks, man.